All right, welcome, welcome, welcome. So I want to do a quick update on my weekly outlook. And actually, I'm starting on the daily chart. Let me actually bring up the economic calendar and just get a little view of everything. But this was the catalyst for today. So yesterday, there was no high impact news for the United States dollar. Today, being Tuesday, February 7th at 12:40 Eastern, we had Fed Chair Powell he had an interview. And so it was actually pushed back 40 minutes. If you remember from my last video, it was saying it was going to be at noon Eastern. They pushed it back 40 minutes. And so what I'll do now is just looking into the charts, we'll see the effect that had on everything. And so if you do recall again from my last video, my outlook for the U.S. stock indices was still bullish, right? That was my bias, was still bullish, just considering that why trade against a trend? There had not been any catalyst for price to start trading lower. It hadn't really traded to anywhere that would be viewed as resistance and saw a very strong reaction from it lower to indicate to me that we were maybe shifting trends short term, at least. But so just looking at the dollar, what I was mentioning was that coming into this week, so Friday was here, we closed Friday. This gray box here is a new area that I did not have marked up in my last video, but the reason I added it was because it does have significance. The levels that I did have, however, were this purple box, this gray line here at 103,418, and then this white line, the January 2017's high. This green line here is also new, but again, it's an area of significance as well as this dash line, areas of significance that I've added this week, considering that we were moving higher. And I wanted to see if this is to continue higher, how it responds at these levels. So that's why they're added now, although they were not on here for the last video. And so now going back to what I was saying about what I would like to see from the dollar was some sort of rejection from the purple box, the gray line, or the white line for me to feel confident and sustain higher prices in the U.S. stock indices. And so as you're looking at this daily candle print, and we got a little bit less than 5 hours left until it close, you do see that there was some up and down movement, but overall, the opening and close are really close to each other, right? So we're putting what is called, as far as like candlestick patterns are concerned, the doji currently. Going down to the hourly chart and now getting to see, right, with the weekly dividers and the weekly opening price denoted here, see we opened up with a gap inside of that first area I was looking for resistance, traded lower from it, but then again, this is why I added this level because it was significant, traded to this level, found support, was able to rally back above opening price and back above the purple box, eventually trading through that gray line and closing above it on a daily chart. Coming into Tuesday, when we open, we pretty much just consolidated above it as support. We start to trade higher going into the New York session and London close. Then we start to reject. Powell spoke. Well, his interview was during this hour here. So you see a nice, right, rejection trade below that gray line, below the purple box, below the weekly opening price. But then we found support once again here. Very next candle aggressively, right, rallies, ends up taking out the high of this candle. And so there was no momentum as far as, well, there is no commitment as far as the momentum lower, right? Because when you see something like this, then to me, this is let me sit on the sidelines now. Let me wait for some more information because although it did trade lower aggressively, it traded right back higher aggressively. So this doesn't signify continue higher or necessarily continue lower. It could possibly just right stretch out sideways here until some more news hits the marketplace to give it reason to then break above or at least break to right this green line, which is officially 103,985, or back below weekly opening price, and now this level is very significant because it's found support here twice. We need to see it probably get below here before we see any sort of continuation lower, right? And so going over to NASDAQ on a daily chart, so going back to this inefficiency that you see with these blue lines, the two solids and then a dash, right? So was keeping my eye on this. We did close above it on Thursday of last week, but then I was speaking about in the video how we opened up below it and we traded lower. So that pretty much just signified to me that there's still potential for this level to be resistance. And so we see Monday's trading We open up with a gap lower. We trade lower. Basically, this right here, a larger volume imbalance between Wednesday and Thursday. We open up with a gap. So I have that denoted with a gray box, but then I also have the middle of it measured out with this gray dash line. And so on a smaller time frame, we'll see the significance of that. Also keeping in mind all those blue levels, right? And then just as we're looking at the daily chart, just seeing that it's pretty much that same thing. We have the open, which was down here, and the close closer to each other, as opposed to how large wicks we have on either side. Then going into the hourly chart, so getting to see right from the weekly perspective with the daily dividers, Sunday's open, pretty much just consolidating. Coming into Monday, we trade lower. We tap the middle of that volume imbalance, find support, trade back up. This gray line, particularly right here, that 12,551.25, this was Friday's low. So we basically find support in the middle of that volume imbalance, resistance at Friday's low, midpoint of that daily inefficiency and the weekly opening price, right? But very choppy overall. Just kept that theme pretty much all of Monday. Coming into Tuesday, we mostly hang around the resistance, as you can see early on. We trade up into there, and then we keep rejecting, right? Keep rejecting. And then going into when Powell spoke, which was in this hour, we eventually were able to find some energy to trade higher. Look at where we trade higher to without any commitment, the high of that daily inefficiency, right? So we trade to the high of that daily inefficiency, we reject and we close off of it. Then we trade higher one more time in that following hour, and then very aggressive trade lower. We still have not taken out the low of the week, which was created with this candle right here. So if you look up at the top, right up in here, the low 12,455.75. So that's currently the low of the week right now. The low of this candle, 12,459.25. So we have not created a new low of the week, even with all of this momentum. And as I'm recording this right now, you're seeing the following hour after this, we're seeing from this old daily volume imbalance, right? Look at how this closed with the body inside of there after rejecting off of that midpoint of this daily volume imbalance as well. An aggressive rally, at least right now, within the first 8 minutes of this hour, right? We're talking about from the low being 12,510.25 and the high currently at 12,620. So we've already rallied over 100 points in the first 8 minutes of this hour. So very volatile right now. Exactly why I'm sitting on the sidelines and just updating my outlook, because you'll have high impact news and real world events will be catalysts for your bias and for just sentiment in the market to shift. You got to be ready to pivot. You got to stay on your toes here. But again, and I didn't say this at the beginning, it'll be in the description, but this is not financial advice. This is just my perspective on the markets from my experience and the things that I've learned so far with my time spent just studying price action and the various things that affect it, right? But just to go down a little bit lower time frame to give you another perspective of some of the more details, if you will, that I've been able to utilize. But before I do that, I do want to just say, and I can use this chart over here, that 13,110 level, which is this daily high here from Wednesday, September the 14th, 2022. That is still a target if we're able to find some support and sustain that support, trending higher. Here we do have that volume imbalance that I was speaking about that I have marked up in my other layout, but not over here. And then also this gap, which we will be looking at when I go back to the other chart on the smaller time frame. And so on the 15-minute, you'll see I have the new week opening gap marked up. And so I know in the last video, I mentioned to keep that in mind, right? You always want to keep this in mind. I trade using the futures charts data. So I know there are people who trade with the cash for difference charts, those data feeds, and they don't always get the privilege of seeing these gaps in price. But that's the reason I pay for this extra data, because I take this seriously. I plan on, doing this for the rest of my life. And I don't see a reason for me to not access as much data as possible for me to be able to take advantage of what's, the opportunities that are provided in the marketplace, right? So marking up this weekly opening gap, you see how, as well as, right, price using this Friday's low, the midpoint of that daily inefficiency, and the weekly opening price as a sort of resistance. Overall, this gap and the midpoint of the gap, which is that purple dash line going through it, was also consistent resistance, right? And so just already how I spoke about how Monday traded, we're just going to look into Tuesday a little bit closer here. So I got the opening price from Tuesday here. See how we pretty much just consolidated above that, basically as support. In London session, we had a nice, right, energetic run lower, which was followed by a nice energetic run higher back up to quote unquote resistance, right? And then we pretty much just were consolidating over here between, right, the opening price of the day and Friday's low and that midpoint of that daily inefficiency. Coming into New York session, we're able to trade below the opening price of the day, right? And then we're pretty much just utilizing this old daily volume imbalance here, this thinner gray box up in here or rectangle, right? And then going into London close, we start to run higher, get back up into that gap, reject once again though at that midpoint, trade below that midpoint of daily inefficiency, below Friday's low, and then this is a 15-minute candle in which the Powell speech started. So his speech started at 12:40. So 10 minutes into this candle was when the interview started. And then you see we were able to trade above the gap finally, which is what I've been looking for to happen all week. Honestly, I would have been willing to sell from the top of this gap had it happened sooner. But given the fact that there was a high impact news with somebody like the chairman of the Federal Reserve speaking, had to respect that the fact that it could continue higher. And so this level up here, the high of that daily inefficiency, I love to see how, right, we traded up and through there, but then we close away from it, right? And then one more time we trade up to it and we start picking up some energy trading lower. We did trade back below the weekly well, below the gap, right? Below the weekly opening price, below the midpoint of that daily inefficiency, below Friday's low, below today's opening, and then back into this daily volume imbalance that was created between Wednesday and Thursday of last week, right? Last week we had FOMC talk about the interest rate decision that they made. And so I was already showing you guys how we open up with a gap between Wednesday and Thursday. This larger gray area is representing that gap, and then this gray dash line is the middle of that gap. So look at how we trade down to the middle of that gap. Same thing like up here, we reject, close off of it, one more time lower, and then as you can see right here, we're picking up energy right back above the opening price of today, right back above Friday's low, right back up the midpoint of that daily inefficiency, right back above the week's opening price, and now even right back above the week's opening gap. So a lot of volatility is picked up into the marketplace since Powell's interview. And this is something that's typical. So just keeping in mind that although you may have a bias of what the weekly or daily expansion may be, when there are catalysts like a high impact news or real world events, you have to be ready to pivot, right? You have to be ready to, accept what you're being shown by the market, by price action. And so that's why I was able to capitalize off of the run up to here, but then nothing else. Like I didn't even, think about I was thinking about it, but I didn't have it in me to take a sell here just because with all of this energy, it could have easily continued and traded up to this level, which I have as an area of interest, as well as that 13,100 level, right? Which again, I'm still looking for prices to reach there, but there have to be something called confluence for me to stay within a trade with risk involved with the market getting there, right? There's a whole difference between having analysis and then trading that analysis. And so that's where, risk management comes into play. But just wanted to, like I said, give a quick update on the outlook. And so currently, just given how we've really just been choppy ultimately until Powell's speech, we got a nice run up to basically the resistance level. We're still respecting this support down here. This low is actually the low of the week. So we look up at that top left, that's going to be 12,455.75 is actually our low of the week. We came very close here. This was the lowest over here, 12,549.25. So about what was that, about $3 to $4 dollars in that that range as far as like how much higher this low is than this low. But still, right now, for NASDAQ at least, the low of the week has been printed on Monday. And to me, that just means that if we don't take out this low, I'll feel confident going into tomorrow and the rest of the week, possibly trading higher with this as a low of the week in mind. But also just keeping in mind that this is a very strong resistance, as well as potentially if we can get up to here, which would just be, taking out this high. If we can get up there and then get back into this range, possibly for the rest of the week, I'll be looking for at least to take out this low and possibly trade back to the low of that daily inefficiency, and even back to, December's high, which if we get back inside of that, we're trading back inside that December range, and all of the inefficiency that was left down there then becomes, targets for me, right? So that's why I'm saying you have to be willing to adapt, have to understand that high impact news and real world events are going to affect the overall sentiment in the marketplace and the way that the market, responds to those types of things. You have to be able to see it for what it is and know how to navigate, right? And so I'm gonna end it there. Just like I said, I want to do a quick update on my outlook because I am still bullish, but again, that's pending, right? That's pending that the dollar is able to break lows and continue lower, and then also this being able to now break what is already established as resistance and then continue higher. So you have to have things called confluence, which are just series of events that if they all happen together around the same time, they'll give you confidence that you can put risk on a certain trade analysis. And so for right now, I'm just neutral at the minute because with everything that just transpired, I need more information before I can then have a analysis that I will consider high probability. So thanks for tuning in. I'll catch you guys in the next video.